The opinions expressed by Karen Scott MIMS and the guests on this podcast are their own and do not reflect the opinions of this podcast platform. All statements and opinions expressed are based upon information that's considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Investments involve risks and, unless otherwise stated, are not guaranteed. Past performance cannot be used as an indicator to determine future results. Any strategies mentioned may not be suitable for everyone. Information expressed does not take into account your specific situation or objectives and is not intended as a recommendation appropriate for you. Before acting on any information mentioned, please consult with a qualified tax or investment advisor whom you have specifically retained to determine if it's suitable for your specific situation. This podcast is designed to provide accurate and authoritative information with regard to the subjects covered. Investment advisory services are offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Harbor Point Wealth Management are independent of each other. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Income regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Income regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance products and guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone Capital Management. Most people simply ignore taxation through the 4 phases of your wealth. Instead of understanding the 3 tax buckets, you arrive at retirement with a huge 401k in the tax-deferred bucket and ignore the taxable and, most importantly, the tax-free bucket. How can the middle-class millionaire, average Joe and Jane, be so unprepared about how to protect their wealth using tax loopholes like the wealthy 1%ers do? Easy. Welcome to the Tax Smart, Tax Zero podcast. This is a show about tax-free wealth. Financial advisors sell rate of return. Annuity salesmen sell what else? Annuities. And part-time tax preparers sell a 1040 to submit on April 15th. But the real goal is to implement strategic tax planning. We invite you to take the journey and explore the path to the 0% tax bracket. It's time to divorce Uncle Sam from your wealth. And now, your host, noted tax attorney and private wealth strategist, Karen Scott MIMS, Esquire.
Well, we have an absolutely fabulous show for you today. Our show is entitled Similar but Sabotaged, the true scenario of healthcare, government, and taxation. Now, normally, I start off by reminding you of the 4 phases of wealth: wealth accumulation, wealth preservation, wealth distribution, and wealth transfer, or the legacy phase. But for today, I'm going to just divide things into before 65 and after 65. And we're going to start our discussion today talking about employer-sponsored healthcare. That is what the vast majority of middle-class people have when they are younger than age 65. So employer-sponsored healthcare is pretty simple. You have premiums, deductibles, and co-pays, but most importantly, it's the same for everyone. So in the employer-sponsored healthcare arena, the employer is the sponsor. You have health insurers who are the administrators, and then you have doctors and hospitals that act as the provider. What's very interesting is that we have a current administration who has sought not to intervene in actual health care, but to your actual health. What do I mean by that? Well, the government is supposed to protect all citizens of the United States. But in reality, it seems that this government and the current administration is actually acting on behalf of the wealthy 1%ers. In this instance, it is those that run the meatpacking industries. And they're doing it to the detriment of these families who have a very difficult choice to make. They make the choice of, do I risk my life and go to work, or do I risk the safety of my family not having a roof over their head? That's a very difficult choice to make. And it's interesting because at this juncture, you would think, how can you implement the Defense Protection Act to what? Produce masks? To produce ventilators? To produce PPE? No. The DPA, or the Defense Production Act, is being implemented in order to have chicken and pork. Sounds a little interesting. So, let me return your attention to the 4 phases of wealth. And in particular, we're going to focus, in this case, on the distribution phase. Even though it's the most critical, it's the most complex, it is the least understood, and unfortunately, the most ignored, and the one for which we are most unprepared. You see, as a society, we've been trained to take a micro approach to taxation. That means we've been taught that, okay, it's okay to self-prepare the 1040 or engage H&R Block or some other part-time person who really doesn't understand tax planning. We've been taught that tax preparation instead of tax planning is what we need to focus on. That's what you do in a micro approach. And then for accountability, we kind of use measures as how much of a refund we receive or what's the smallest fee that we can pay the tax preparer. And most of all, in this micro approach to taxation, we focus on just 1 year at a time. So that's pretty interesting, because let me now relate that to healthcare, and in particular, healthcare at age 65. In case you have just joined us, you, of course, are listening to the Tax Efficient Retirement Planning Show, another episode of Tax Smart Tax Zero. I am your host, Karen Scott MIMS, tax attorney, registered investment advisor representative, accountant, estate planner, and certainly my favorite role, private wealth and tax advisor. If you have any questions about this topic that we're talking about today, don't hesitate to give me a call at 866-621-6660. Again, that number is 866-621-6660. By the way, if it's easier for you to text, don't hesitate to text the word tax, T-A-X, to 301-900-5758. By the way, our show for today is entitled Similar but Sabotaged, the true scenario of healthcare, government, and taxation. So, we were talking about healthcare at age 65, and you've heard me say a couple of times before that you are, in fact, running this company called My Wealth Incorporated. And so My Wealth Incorporated has the same kind of statements. It has the balance sheet, it has the income statement, and it has the statement of cash flows. One of the expenditures that you have on the income statement at age 65 is for healthcare, and now it's the involuntarily subcontracted healthcare to the federal government. They, of course, act as the sponsor. They, of course, act as the administrator. And, of course, you still have the same doctors and hospitals that act as the provider. Now, I should say, it's not just any old federal government that you've handed this function over to. It's a federal government that does everything our parents tell us that we shouldn't do. It's a federal government that spends more than they make. It's a federal government that treats people unfairly at the expense of others. In other words, it prefers the wealthy 1%ers. It's a federal government that, if not for their ability to just print more money when they feel like it and account for overspending by just adding it to the deficit, would otherwise be a bankrupt company. So, you've heard me say before, our philosophy is a little different, right? We believe you have to stop pretending that the distribution phase doesn't exist, because the distribution phase is the most critical, the most complex, but like I said, the most ignored. More importantly, in this phase, it's where you really have to understand the term comprehensive wealth management. You have to understand tax and wealth optimization, and you have to take more of a macro view on this complex area of taxation. Because if you're truly addressing wealth without understanding and including taxation, I'm going to tell you that's fatal. So what do I mean when I talk about this macro view? First, it's acknowledging that you not only have a tax liability, but you have a rather large one. The balance sheet can't just show an asset without showing the corresponding liability in the liability section. So in other words, you have a 401k, a 403b, a TSP, or IRA. You can't continue to ignore that 60-40 split. I'm not talking about the 60-40, 60% equity, 40% bonds or fixed income. I'm talking about the 60% that belongs to you and the 40% that constitutes the lien that the IRS has against those funds. Once again, you can't just show an asset on the balance sheet without showing the corresponding liability in the liability section. In case you have just joined us, you, of course, are listening to the Tax Efficient Retirement Planning Show, another episode of Tax Smart Tax Zero. I am your host, Karen Scott MIMS, affectionately known as your Tax ESQ. Our show for today is entitled Similar but Sabotaged. We're talking about the true scenario of healthcare, government, and taxation. So here you are, you're running this company, My Wealth Incorporated. In the distribution phase, i.e. the 30 to 40 years that you thought would otherwise be known as a very happy retirement, it seems like it's being sabotaged. So I will say to you, as we prepare for break, if you are age 55 and older, if you are in what I call the retirement red zone, either the first 5 years in retirement or preferably the first 5 years before you actually retire, I would urge you to sit back and do a couple of things. Number one, I'd like you to imagine the idea of a tax-free, stress-free retirement and realize that it just doesn't happen by accident. I would ask you for a moment to look away from the 7 tax brackets that you have been ignoring, quite frankly, until now. And I would encourage you to look at but one tax bracket. That would be the 0% tax bracket. You see, Zero is my hero. By the way, that's the name of our tax study group. And if you want some information about that, once again, you can reach out to us at 866-621-6660. That's a group that we meet every single month, full of information. It gives you the opportunity to ask questions. It gives you to learn about tax concepts, very advanced and sophisticated concepts that those wealthy 1%ers are using that you too should have the opportunity to utilize. So Zero is my hero. But when I say Zero is my hero, I'm talking about being in the 0% tax bracket, that one tax bracket that I think that matters. And I say that because I think that you should be in the 0% income tax bracket, the 0% capital gains tax bracket, the 0% estate tax bracket, the 0% excise tax bracket, and the 0% inheritance tax bracket. So our show today, of course, is entitled Similar but Sabotaged, the true scenario of healthcare and taxation. And we're talking today about this intersection of healthcare, government, and taxation, because healthcare at age 65 and beyond is not what you think, okay? It's definitely not going to be what you imagined because, again, it's being overseen by a government who is cash-strapped, right? And that issues these tax loopholes at the expense of the hardworking middle class, average Joe and Jane, to benefit the wealthy 1%ers. So I would suggest to you right about now, why don't we sit down and number 1, have a complimentary consultation? Number 2, why don't we have a tax and healthcare analysis? That's a report that's customized and based on your actual situation. And number 3, as I said, why don't we understand what we need to do to be on the path to the 0% tax bracket? Again, when I say that, I am talking about the 0% income tax, 0% capital gains tax, 0% estate tax, 0% excise tax, and 0% inheritance tax. In case you have just joined us, welcome. You are listening to the Tax Efficient Retirement Planning Show, another episode of Tax Smart Tax Zero. I am your host, Karen Scott MIMS, tax attorney, registered investment advisor representative, accountant, estate planner, and certainly my favorite role, private wealth and tax strategist. Our show for today is entitled Similar but Sabotaged. It's the true scenario of healthcare, government, and taxation. So right about now, you're probably saying, well, yeah, I understand that starting at age 65, then I get to involuntarily participate in Medicare. But you're probably also not imagining all that Medicare entails. Much like the distribution phase, I would say that Medicare is very complex. I think most people arrive at 65, they arrive knowing that they have to sign up for Medicare, but there's no one that's actually sitting down and explaining to them, first of all, the tax laws that apply to Medicare. No one is explaining to them that there's a little bit more to it than you might think. No one's sitting down and explaining to them the different plans so that you understand which plan is best for you based on your own health condition, based on the medicines that you take. Those are important things that you have to consider. But I would dare say no one is sitting down and explaining to you that there is a tax consequence to Medicare. So if you don't understand the mathematics of Medicare, if you don't understand the intersection of healthcare, government, and taxation, it is likely that you're making some pretty bad decisions in the most crucial phase, right? I.e. the distribution phase, the phase where you thought you were going to have a tax-free, stress-free, but hopefully not scot-free retirement. In case you have just joined us, of course, you're listening to another episode of Tax Smart Tax Zero. I'm your host, Karen Scott MIMS, tax attorney, registered investment advisor representative, accountant, and estate planner, but my favorite role, private wealth and tax advisor. So we're going to talk about just how bad it is when we talk about healthcare in retirement, healthcare after the age of 65. And as always, we're going to continue our mission to make you more enlightened, more empowered about the idea of taxation. Don't go anywhere. We'll be right back.
Of all the questions you get asked every day, this is one you shouldn't ignore. How much money in your 401k or IRA is actually yours? Not what its current value is, but how much of it will end up in your pockets, not the government's. Remember, you still might owe taxes on that money. And how about tax efficiency? Are you overpaying, or are you keeping every dollar you're entitled to? Look, I know it's confusing, it's complicated, and it definitely isn't fun. That's why Harbor Point Wealth Management works to help make sure you aren't paying more in taxes than your fair share. They have a complimentary report to help make sense of taxes and how they can impact your retirement. Get it today. It's your money. You deserve to know what's at stake. Don't do the IRS any favors. Get your complimentary tax report from Karen Scott Mims and Harbor Point Wealth Management today. Just text the word tax to 301-900-5758. That's the word tax. Text it to 301-900-5758. Investment advisory services offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Harbor Point Wealth Management are independent of each other.
Welcome back to the Tax Smart Tax Zero podcast. And now, your host, noted tax attorney and private wealth strategist, Karen Scott Mims, Esquire.
Welcome back to the second half of the show. Thank you so much for joining us. Of course, you are listening to the Tax Efficient Retirement Planning Show, another episode of Tax Smart Tax Zero. I am your host, Karen Scott Mims. And I am so very glad in this second half of the show. You know, this is my favorite part of the show. Why? Because for this second half of the show, you know, I like to nickname it tax liabilities and loopholes, right? And so it's the whole idea of the path to the 0% tax bracket. But more importantly, it is when we talk about divorcing Uncle Sam as the primary beneficiary of your wealth. Now, you've heard me talk in the first half about the concept of comprehensive wealth management. That is what we do, right? That's our model in which we have 20 different areas of planning. Obviously, taxation and healthcare are part of that planning. And in particular, today, our show, which is entitled Similar but Sabotaged, the true scenario of healthcare, government, and taxation, we're talking about the intersection of healthcare, government, and taxation. We want to be especially mindful of the fact that, number one, government, and in particular, the current administration, operates on behalf as the representative of the wealthy one percenters. Number two, there have been 3 major pieces of legislation in the last 3 years. That's certainly not normal. Typically, major tax legislation doesn't happen, we'll say, every 15 to 20 years. Number 3, I bring your attention, right, just if we did a quick review of the CARES Act alone, we know that the first part of it added $2.2 trillion to the deficit. It's unmanaged, it's without oversight, and it ended up going, especially the PPP part, it ended up going to not to small businesses as intended, but to big businesses and the wealthy one percenters that serve as their CEO. Not surprisingly, there has been another round, another $480 billion, the next part of which has already been dispersed. So what does this do? And how can adding trillions of dollars directly impact the amount of your lifetime taxes? And more importantly, how does it affect your health care? More importantly, how does it affect Medicare, which is the health care that, again, you have after age 65? So Medicare provides the same exact service to the same people, but charges different prices based on income. So in other words, the greater the income, as shown on the 1040, the greater the price that you are going to pay for the exact same service. If I listen to that definition, in my mind, that is clearly indicative and is the true essence of the meaning of a tax. So if you think about it, in other words, Medicare at age 65 and beyond acts as a tax just as it did prior to age 65. And if that's the case, the question becomes, what are you going to do about it? In case you have just joined us, you of course are listening to the Tax Efficient Retirement Planning Show, yet another episode of Tax Smart Tax Zero. I am your host, Karen Scott Mims, tax attorney, registered investment advisor representative, accountant, estate planner, and certainly my favorite role, private wealth and tax advisor. Again, I will say to you, if you have any questions about this episode and the content of this episode and want to understand and have your own complimentary consultation, give us a call. The number is 866-621-6660. If you want the report that I talked about, you can certainly text the word tax, TAX, to 301-900-5758. Again, our show today is entitled Similar but Sabotaged. We're talking about the true scenario of healthcare, government, and taxation. So, in my last few minutes, let me point out to you. Let me give you an example. Couple number one, let's call them Sam and Susie. They had $1.5 million of tax-deferred funds between their 401k and their TSP. They had $100,000 of taxable funds, and they had zero of tax-free funds. Let's call the amount that they pay for Medicare X, right? So we went through the process of comprehensive wealth management that emphasizes tax planning, and we did some serious tax planning. So afterwards, they had $500,000 of tax-deferred funds, now $1 million of tax-free funds, and that's very important, and you'll see why in just a few minutes. Now, let's contrast that to couple number two. Let's call couple number two Average Joe and Jane. They have $1.5 million of tax-deferred funds between their 401k and their TSP, Thrift Savings Plan, which is applicable to federal government workers. They have $100,000 of taxable funds, and they have $0 of tax-free funds, and they keep that same scenario. Unfortunately, the amount that they pay for Medicare is actually 3 times X. So they pay 3X for Medicare. Differentiate that between what Sam and Susie are paying. So it's interesting. For both couples, the cost of Medicare is based on income as shown on the 1040. The difference, though, between tax-deferred funds and tax-free funds is huge. In the first half of the show, we talked about taking the micro view to taxation. We talked about the micro view being one in which we're only concerned about the current year's tax return. And we talked about the micro view being the one in which we measure accountability simply by how big the refund is or by how cheap of a price we were able to pay to the tax preparer. I would suggest to you in these last few minutes that we have left that we consider a macro view of taxation. You see, the macro view is, first of all, acknowledging the need to prepare for the distribution phase of your wealth, right? We talked before and said that the distribution phase was critical, it was complex, but it also requires an understanding and implementation of tax planning. Quite frankly, it's the difference between paying X or paying 3 times X for healthcare. And it is the acknowledgement, most and foremost, of a cash-strapped, revenue-starved government that is going to continue to do 2 things. First of all, they are going to keep implementing legislation that benefits the wealthy 1%ers and adding trillions of dollars to the deficit. Number 2, they are going to seek to shift the burden of that deficit by increasing the taxes that are paid to the middle class, i.e. the average Joe and Jane. So if you've been listening carefully, if you've been listening to the examples that I've given, you understand that the only difference between couple number 1 and couple number 2 was that couple number 1 realized that they needed to engage in effective tax planning. They needed to, in essence, put themselves on the path to the 0% tax bracket. And of course, when I talk about the 0% tax bracket, I am talking about zero is my hero. That's, of course, the phrase that we use to refer to our tax study group. By the way, if you want to be a member of the tax study group, please do so. Give us a call. The number is 866-621-6660. Again, that number is 866-621-6660. But when I talk about zero is my hero, I'm talking about the path to the 0% tax bracket. I'm talking about a 0% income tax bracket. I'm talking about 0% capital gains tax bracket, a 0% estate tax bracket, a 0% excise tax bracket, and a 0% inheritance tax bracket. Well, in case you have just joined us, where the heck have you been? You have been listening to the Tax Efficient Retirement Planning Show, another episode of Tax Smart Tax Zero. I, of course, am your host, Karen Scott MIMS, and every single week, we are sitting down to talk about this idea of taxation. Our show for today, of course, was entitled Similar but Sabotaged, the True Scenario of Healthcare, Government, and Taxation. I would say to you, in the last few moments that we have left, if you are age 55 and older, if you are in the retirement red zone, meaning that you are perhaps in the first 5 years of retirement, or perhaps you have 5 years to go before you actually retire, I cannot stress to you enough the difference between tax preparation versus tax planning. Tax preparation is when you take the micro view. You are literally only concerned about what happens on this year's tax return. However, when you understand that you need to take a macro view of tax planning, right? A macro view of taxation, you're understanding tax planning. You're understanding all of the things that need to be done before you actually get to that distribution stage. Remember, we've said before, there are 4 phases of wealth. There's wealth accumulation, wealth preservation, wealth distribution, and wealth transfer. All of those have a component of taxation that you need to understand. As a matter of fact, the webinar that we're having next week is entitled Tax Planning Through the 4 Phases of Wealth. And so again, I would thoroughly encourage you to join us for that. All you have to do to register is to either give us a call. The number is 866-621-6660. Or if it's easier for you to send us a text message, please feel free to text the word TAX, T-A-X, to 301-900-5758. In our last few minutes that we have left, I will say to you that, you know what? Sit back and ask yourself, are you paying too much in taxes? The answer is yes, because in reality, we live in a society, we have a government that says, you know what? There are really 2 tax systems. There's one tax system for the knowledgeable, and there's one tax system for everyone else. You don't have to worry about what's going to happen to the wealthy 1%ers. Quite frankly, they are already being taken care of. Number one, because they understand that tax expertise is essential, right? We spend a lot of time, especially in the accumulation stage, focusing on, how much am I earning? What's my rate of return? We focus on things that don't matter to the same degree as taxation. We kind of discard taxation as a subject that we even need to be bothered with, right? Because of course, we're saving in that tax deferred bucket, not realizing the consequences of what will happen to us when we reach the distribution stage. Well, goodness gracious, where does the time go? In case you are just tuning in, that's too bad, because we've now come to an end of another episode of the Tax Efficient Retirement Planning Show, another episode of Tax Smart, Tax Zero. I'm your host, Karen Scott Mims. Thank you so much for joining us today. I will say to you, Barbara, if you've joined us and are listening, get back to work.
This concludes another episode of the Tax Smart, Tax Zero podcast. Get ready to create tax-free wealth and start on the path to the 0% tax bracket. To receive your Tax Smart Tax Zero toolkit, you can reach us by telephone at 866-621-6660 or text the word TAX to 301-900-5758. Or send an email to tax@taxsmarttaxzero.com. Want to attend our virtual seminar, Guide to Tax Minimization, Estate Planning, and Passive Real Estate Income? Text the word seminar to 301-900-5758. Send an email to seminar@taxsmarttaxzero.com and we'll register you and also keep you updated of all future virtual seminar dates and times. Don't forget to visit taxsmarttaxzero.com and on our YouTube channel. There, you can like us and subscribe to learn more about our tax study group, Zero is My Hero, or attend our upcoming webinars. Follow us on Facebook. And as always, sign up for our monthly tax newsletter and divorce Uncle Sam as the primary beneficiary of your wealth. Join us next week for another episode of Tax Smart, Tax Zero, the path to the 0% tax bracket.